for dialing in for the third open house on the Open Credit Enablement Network. Just a few weeks back, we introduced the concept of OCEN in our first session. And then in our second session, we shared with you the overall market architecture and different use cases that are possible, different types of credit products that are possible and can be created using the OCEN infrastructure. In today's session, we will actually do a deep dive into how do you make that possible. So it's going to be a granular walkthrough into the underlying technology rails behind OCEN. So what are those APIs? How do they work? How do the lenders and LSPs communicate with each other? We're going to walk you through all of that. And hopefully that brings to life the inner workings and you're able to walk away understanding, depending on what type of player you are in the ecosystem, what you can build on top of OCEN. To start off, as usual, a quick overview into iSPIRT. So I'm Siddharth, a volunteer with iSPIRT, and most of us at iSPIRT are volunteers contributing towards the various digital public infrastructure projects out there. iSPIRT is a nonprofit technology think and do tank, and we take a long-term view of societal problems. So the two societal problems that we've picked up are financial inclusion and health inclusion. And within financial inclusion, we are specifically focused on democratizing credit. And our belief is that solutions in these problem areas will only emerge if there's a jugalbandi between public infrastructure and private innovation that gets built on top of it. And any societal problem takes a long time to solve, whether that be the case of getting individuals to segregate their garbage and so on. And so you need institutions that anchor this for the long term. So iSPIRT is one such type of institution that takes a 30-year view, but that's not uncommon. So for example, in the West, you'd have universities and industrial research labs taking a similar long-term view and really anchoring that problem. For example, this is what Carnegie Mellon did in the world of driverless autonomous car technology. You'll then have venture capitalists and policymakers that go on to take an 8 to 10-year view of these problems. And then the most important folks, which are the entrepreneurs themselves, either as incumbents or upstarts and challengers, are taking a 3 to 5 year view and really bringing the solutions to life on top of this public infrastructure. And at iSPIRT is really about no greed, no glory volunteering. So we really want to be the wind in your sails as you guys go out there and build on top of these various platforms. I'd now like to hand it over to Ankit, who will walk you through the rest of OCEN, and then he will hand it over to Sudhanshu, who do a deep dive into the technology behind OCEN. So over to you, Ankit.
Thanks, Siddharth. Good evening, everyone. I'm Ankit. I'm a volunteer with iSPIRT as well, working on OCEN, the Open Credit Enablement Network. This is a quick refresher of OCEN as a standardized protocol for information exchange between lenders and LSPs, the loan service providers. We had brought it up in the earlier sessions as well. And the LSPs, as we have discussed before, can be any entity that has a direct business connect, a high interface with their customers, who can be prospective borrowers for the OCEN-enabled lenders over here. And our belief is that this standardization through OCEN will accelerate access to affordable formal credit for the ones who need it in our country. So we are going to address some of the queries that have been the most prominent ones upfront, and then do a deep dive into APIs and the architecture. So one query that has come up is that, is OCEN aggregating and sending loan applications to different lenders, or does LSP make API requests with each lender separately? So the answer is that OCEN is a protocol, just like HTTP, and is not a switch in the middle. Hence, there is no aggregation of loan applications, and LSP makes API requests to each lender separately. Another query that came up prominently was that are all API calls asynchronous or not? And are there turnaround time TAT SLAs for the different services? So the answer over here is that yes, all the API calls are asynchronous in nature, and the turnaround times SLAs for timeouts and throughput have been laid out in the GitHub repository. Moreover, the APIs here, as I'd like to point out, are idempotent in nature. So if you don't get a response, you can hit again. Now, this also ties up with another query that has come up recently, that will lenders be OCEN certified as well or not? And the answer to that also is yes, that they will undergo a light certification upon integration of OCEN APIs by CredAll empaneled agency. Now, that certification will cover both functional and non-functional test cases and will further ensure the stability and reliability of responses for the LSPs. Now, with these two prominent queries out of the way, let's deep dive into an architecture diagram here that will give us a lay of the land. We'll discuss broadly the interaction between different entities here for bringing cash flow-based lending to life. So let's start with the top left with LSP, the Loan Service Provider app. You can see the LSP app over here. What it does is that it orchestrates a clean front-end experience for a borrower. Now, I'd like to highlight that this front ending is the baseline activity that it does. And on top of it, it carries out enhancements for better borrower experience on the app. Now, in these enhancements, for example, they can enable consent initiation in multiple ways, such as with an AA SDK integration, right, with an in-app webflow, right? And they can also enable this with a separate mobile app opened via an intent call. The variation of modalities in these enhancements also come forward when you see that an LSP can create different clients. They can create a desktop app, a mobile app, even a chatbot, and so on for the borrowers. And similarly, there is a great room for enhancements for setting repayment mechanisms in different ways, especially if LSPs are sitting in the middle of some cash flow associated with the borrower and so on. So this actually ties in with what we call the 3Ds for an LSP, which stand for what they provide. You know, they provide distribution and data for lenders and design delight for the borrowers. And different LSPs will create differentiated experiences on top of OCEN in the market for their borrowers. So moving ahead, the LSP is connecting with lenders via OCEN, the common language or protocol, which is standardizing the loan's end-to-end cycle from origination to repayment between the lender and the LSP, right? And these OCEN badges indicate that the LSP and the lender are OCEN-enabled. And I must reiterate that it's not a switch, it's a protocol. Now, on the lender's premise, the component interfacing with many LSP apps is OLI, the OCEN lender interface. Now, for a lender, what it does is that it does the forward connect with many LSP apps and ingests the array of loan applications all in standardized format for loan consideration. And in the backward connect, it orchestrates the internal communication with the BRE, the business rule engine, the LMS, LOS, the loan origination management systems, the payment stack, the FIU gateway, which is the financial information user gateway of the lender. In BRE, the business rule engine, the lenders create new instances of loan product types, and payment stack is utilized for payment disbursement and recollection. So the lender here makes credit decision in real time and also does the bureau check on their own as a separate activity with no involvement of OCEN APIs there. It also does a lookup on common pledge registry. The idea over here is to avoid deduplication, say, of invoices and to tap into the latest real-time exposure of a prospective borrower who might be over-leveraged. Now, if I could draw your attention to these three purple boxes that you see, what you realize is that these are not standardized across all the lenders. You know, it will vary from lender to lender. And the two FIC, FIU gateway components here, the financial information provider and the financial information user gateway components, are the lender's components for their connect with the account aggregator, which is why they have been engulfed in a separate box here and highlighted separately. Now, this FIU gateway pulls the data from account aggregators, and the financial information flow, such as bank statements and more, comes from this AA Connect. And further down, if you observe, multiple financial information providers plug into Account Aggregator. This expanding set of FIPs will enable provision of important data signals for lenders in the future. And to address another query that surfaces quite often, an NBFC can also be a lender on OCEN. If I could, from this general LSP architecture diagram, could shift our focus to the Sahay GST application architecture diagram that we had given a demo of a while back, what you would realize is that you would observe that broadly, the components remain the same here with a couple of differences. So Sahay GST, just for a quick recap, is a specific implementation. It's a reference example implementation on top of OCEN. And it's an example app for financing GST and merchants. So for enabling that, there is a direct integration with GST in here that enables merchants login with GST and username and ID, as you witnessed in the demo of Sahay GST that Siddharth gave in the first session. It further enables fetching of GST and invoice and merchant profile data. Now, a keen eye here would observe that GST is also mentioned at the bottom as an FIP. So why are there two connections here? The way to look at it is from the point of view of two objectives. One is that, what do you want loan on? This is where the GST and integration helps the borrower choose the invoices they want to share with lenders for financing. This actually builds upon what we discussed a few minutes back. As part of the design delight, the LSP wants to create a streamlined and better experience for the borrower. So this example makes that notion concrete, and we will see more LSPs innovate over here. The second objective is for mapping the historical data. And that past data of the merchant to assess credit worthiness is first fetched from the GST and FIP here as part of a pull on the Account Aggregator. So that's the distinction. The second difference over here, which is more subtle, is that the common pledge registry over here today enables reduplication at app level of Sahay GST. And as more LSPs go live, it will be externalized. With that, I would like to hand it over to Sudhanshu, my colleague, who will run us through API flow sequence diagrams and more.
Thanks, Ankit, for the handoff. So broadly, as we spoke about, the LSP is creating an abstraction on top of the lender to try and reach a larger number of borrowers and build a great credit experience. Now, all of this starts from the first API, which is called the Loan Application API. As you can see, it's a direct call between the LSP to the lender. And the idea is for the LSP to provide information about the borrower to the lender. I mean, it's like what kind of loan is he interested in? What is the amount he wants? Is he providing any collateral or is it uncollateralized? And are there any other reference documentations? So all of this information gets shared as a part of the Loan Application API. In Sahay specifically, as you can see, us showing the invoices, the initial GST invoices, is to help the borrower select which ones are most likely to get credit. And via this filtering, when the person clicks to share invoices, a loan application is going to get created with each of the lenders who are part of the Sahay GSTN solution, so that they can sort of start processing this loan. Once the lender knows what the person is interested in, the loan amount and all these things, he or she needs data to underwrite this particular loan. For that, we are leveraging the Account Aggregator ecosystem. Now for the people who are not yet aware about this, the idea with the Account Aggregator ecosystem is to build out a UPI-like data sharing experience, where you will have applications provided by different account aggregators, and the customer is able to link out different accounts to an account aggregator. These accounts can be your bank accounts, your GSTN, your mutual fund, insurance, XYZ information. Once this linkage is happened, any FIU who wants access to this data will be able to raise requests to the customer saying, please give me access to XYZ information. The customer will go into the account aggregator application and approve the request. Post which the FIP, which is the bank or the GSTN platform, is going to directly share this data encrypted in an encrypted format with the FIU in question. So this reduces all the hassles around fake bank account statements or people fudging their GSTN invoices. So that's why we are leveraging the account aggregator ecosystem. Now, so what happens is once the LSP has created a loan application, in the next step, he or she will ask for, okay, yeah, this is the link to more detailed sandboxes and more detailed implementation about the account aggregator ecosystem. Please go ahead and see this link. We'll share it post the presentation for access to sandboxes on account aggregator. Coming on to the part after the loan application got created, the LSP is facilitating this whole consent sharing or the data sharing with the account aggregator by, first of all, asking the consumer to enter his or her account aggregator ID. This is like a UPI, VPA, or a handle, which we're calling as the virtual user address, VUA, that I, as a customer, I'm going to enter into the Sahay GSTN application. This is going to be shared by the LSP to the lender directly. The lender in turn will raise a consent request to the account aggregator saying, I need access to this person's GSTN and bank account statements. And the lender will inform the LSP via the consent handled response that I have raised the request. The LSP correspondingly shows a loading screen or something like a waiting screen telling the customer, please approve this request in your account aggregator application. At this stage, the LSP, if it has decided to integrate with an account aggregator, have a deep integration, he or she might allow the customer to walk through and give the consent within their own app. Otherwise, it's going to be a typical flow of like a payment wherein you show a loading screen and then the person changes apps, goes into the account aggregator app and approves the request. So once the account and once the user has given consent in the account aggregator will ping back the lender, will inform the lender that consent was given and here's the URL for you to get the data. The lender will directly fetch the data from the FIP in an encrypted format and will inform the LSP that data sharing was successful. So that's the consent status response API that is shown on the screen. What we've shown here is kind of the view which an account aggregator will show to the customer and sort of help him decide which all bank accounts, what GSTN data, XYZ things to share for the purpose of getting a loan. Once this consent flow is done, now the lender has information about this, like let's say Sudhanshu is interested in getting a loan, and Sudhanshu has also shared his bank account statements and GSTN information with me. So the next comes is the offer APIs. What happens here is once the LSP gets to know that the lender has received the data, they will raise a generate offers request to the lender. The lender on its end is going to respond back with multiple loan offers. Now, some of these might be like a 30-day loan, something might be a 6-month loan. So a lender can provide a variety of offers that satisfy the constraints or the requirements of the customer. Post this, the LSP helps the customer choose which loan offer he or she wants to go ahead with. Now, so once the loan offer gets selected by the customer, the LSP will call the set offer request API of the lender. So after the set offer request API, now the lender knows that this person has selected this particular loan offer. We have already underwritten him, and we move on to the process of actually processing the loan application. In which one of the more major APIs is the loan acceptance API. Here, it's pretty simple. It's basically about the LSP informing the lender to trigger the loan acceptance request. Now, this can be an SMS OTP. It can also be something done by Aadhaar e-sign or any other legally valid form of digital signature. So the lender will basically respond back to the LSP, informing him that an SMS or something has been triggered. The LSP takes this information on the app itself and shares it with the lender. This allows the lender to have the confidence that the customer himself or herself has signed this loan application and the LSP is not like frauding somebody in the system. So once loan acceptance gets done, the next process is to set up the repayment. Now repayment is slightly complicated in the sense that there are multiple repayment options available. Somebody might want to repay back the loan via an e-NASH, or might prefer a paper NASH, might also prefer a UPI e-mandate for those things. So to abstract out that entire experience of how the loan repayment gets set up, what we've done is the LSP will call the lender asking for a list of repayment plans that the lender supports for this particular loan or loan type. So just for example, if it's a very high value loan, a lender might say, I only accept e-NASH. If it is a small ticket size loan, I will accept UPI, I will accept any other form of mechanism. So the lender will return back to the LSP various repayment plans that they support on this particular loan offer. This will also include information about fees and charges, if there's anything around setup costs, all those things. Again, the LSP helps the customer choose which is the best loan repayment option and calls set repayment plans API. This information, when it is given to the lender in turn generates something like a payment URL or a payment link. So I try to show it by showing a TSP here. The idea is that the lender internally is going to return back, is going to internally generate this URL and return back to the LSP, who will then load this page inside the LSP app. So this is a direct lender page hosted inside the LSP app on which the customer is going to provide the UPI, VPA, or his or her e-NASH like bank account selection. Once that gets done, the customer interacts with the lender directly at this point on the page that you're seeing in front of you. This is a sample of how a lender might directly as well show the repayment option to the customer. Once this setup is done, the LSP page will be closed. So at success or failure in either cases, the LSP will quickly check with the lender whether repayment was successfully set up or not. At this point, if the repayment was not set up, the lender will inform for failure and the LSP is supposed to go through the process again, help the customer set up the mandate. If it is successfully done, the lender now has confidence that he or she has a mechanism for collecting back the funds that they are going to disperse. So once the repayment gets set up, similarly, on the repayment end, what can happen is that a lender might individually collect the repayment because of their business rules, or an LSP might get confirmation from the borrower and then initiate the debit request. In both these cases, what's going to happen is if the lender is directly debiting the customer, he or she will inform the LSP so that an appropriate notification can be sent to the customer. Repayment is going to be due or it has been debited, all these things at the stage. On the other end, if the customer goes to the LSP app and tells him, I have gotten requisite funds right now, please collect the loan back, the LSP will trigger repayment request to the lender. The lender will initiate a direct debit using the payment rails and payment ecosystem to collect back the funds. The LSP can call a status API to check with the lender whether it was successful or not. And the lender on its end will call confirm repayment whenever the payment is successfully done on the site. So now, and this entire trigger repayment API is not going to be called during the initial setup of the loan. It will be called maybe a month or 3 months or 6 months after the loan was set up. This is just to explain you how the flow will work. So now coming on to the consent part, once the loan repayment has been set up successfully, the LSP is going to request or enable the whole regular consent monitoring to happen with the lender. For this, it is pretty much the same as what we did in the underwriting phase, wherein the LSP gets the user's consent handle. This might be explicitly asked again, or the LSP might implicitly raise the consent handle request. The lender is going to raise a request to the account aggregator, telling him that I want recurring access for the next 6 months on a weekly basis. So like you can see the core, the most important parameters right here, which is what is the purpose for this, what is the duration, what is the frequency, and till when is this monitoring access available. The user corresponds and gives consent. A lender will get to know about this and he or she will inform the LSP that consent monitoring has also been set up. Finally, after all of these things are done, the disbursement comes into picture. At the disbursement time, the LSP, once it has gone through the entire life cycle of the loan product, is going to now call for a trigger disbursement request to the lender. The lender might do some final checks, for example, checking with the common pledge registry to ensure that whatever documents or information that the user has pledged for the purposes of this loan have not been pledged somewhere else. Check the lender will do at the last moment, ensure that this is an invoice which is not into the common pledge registry, and then do the disbursement to the customer. Once the disbursement gets done, similarly the LSP is able to check for whether the disbursement is successful or not and get back a response that disbursement has been successfully done with all the relevant information that's required to show to the customer about the disbursement. Cool. So now we'll come to the other part, which is how do I represent other loan products with these APIs. So I just want to underline this part, that at the end of it, we've tried to keep the entire life cycle of getting a loan at a very abstract level. Each of these APIs supports parameters that have been generalized so that we can use it for any kind of loan disbursement. To be more specific, any kind of transaction where the lender deposits money into a savings account or a current account of the customer can be facilitated via these APIs. We might have to make some minor parametric changes, but overall the experience should remain the same. Just to show you the example, what we did when we started with this entire exercise, the first part was to standardize what is a loan object in today's world. I'm just showing you the certain key elements that constitute a loan object. So for example, type is capturing what is the type of a loan. It can be a cash flow based loan, it can be a personal loan, a home, or a vehicle loan. Borrower is a field which will contain information about the borrower itself. The borrower identity is like a government ID that the person uses. Documents are reference documents that the borrower has submitted in its quest to get a loan application. For example, in Sahay, documents could be your GST and invoices. In your home loan, it can can be your contract, your legal contract showing that you own that house, and contact details are just about your address, your phone number, your email, and those things for a borrower. Collateral is meant to be more about what is the exact property or the instrument that I'm pledging to get this loan. This is different from documents, because documents can be can be used for me to just understand whether you are somebody who is capable of giving the loan back or not. A collateral, on the other end, is something where the borrower has given a legal right to the lender for the purposes of collecting the funds in case the borrower is not able. So the collateral is going to be again consisting of collateral, what is the institution who maintaining this collateral. So for example, in home loans, it can be choose to digitize all the agreements in the country across that. Now coming to the guarantors part, guarantors are again, if you are facilitating a kind of loan which requires multiple people to co-sign that loan application, guarantors is going to be the field where we will capture all the details of the additional applicants. Applicants are actually the direct beneficiaries of this loan. Guarantors are people who will only be involved if the loan defaults. So both of these things get covered. Terms is another very key field. Terms is supposed to encompass all the key parts of the loan agreement, which is like what is the interest, what is the tenure, what is the specific loan agreement that is being signed, what are the charges for the loan itself, and what was the repayment option or disbursement option that was selected by the customer. So all of these subfields together create the loan term, and extensible data has been kept as a generic field, so that going forwards, as we encounter more and more use cases, we are able to enhance the specification without creating any backward incompatible change. So that's the loan object. To walk you through some concrete examples of it, this is the Sahay loan product, wherein we have kept the type to be cash flow and the interest rate can be variable. Now, this is something that the LSP and the borrower are going to know when the bank returns with a loan, returns back with its loan offer. Fill in the terms field dot interest, what is the offer at which they're willing to extend the loan. Similarly, tenure is going to contain what is the number of days in which the borrower is expected to repay back the loan. For Sahay, in the borrower field, we have entity. Since it's an MSME based loan, the ID that we'll be using is going to be their GSTN or their company PAN, anything that the lender is okay with. Documents contain all the invoice lists that Sahay fetched from GST. This is meant to give the lender insight into the future cash flow of this business, try and understand whether they have open contracts and therefore are expected to get whatever some amount of money from the future, which can be used to repay back the loan offer. Similarly, there's another key field, which is the now this is not in Sahay direct now. However, example, who are facilitating like a the LSPs who are business relationships with a particular lender, with a particular borrower, might add in additional information which could be used by the lender for the purposes of underwriting. So for example, it can be about how highly rated this particular restaurant is in this area, and that can be used by a lender to give a better loan offer. So that becomes the LSP score per se. And then finally, we have the terms.charges, which is about what are the costs associated with taking this loan. It can be your delayed repayment charges, your processing fee. It can be something around what is the documentation cost for the loan. All these things, different types of charges are incorporated in the terms.charges object. And terms.repayment option is all the repayment options that the lender allows for the purpose. Similarly, if we were to launch a personal loan product on top of these APIs, the only changes that will happen is that the type of the loan itself is going to change. The interest rate is going to be very specific to who's the person who's taking this loan. Tenure again changes. The borrower field here could be that the type is a person and the government ID is what we're taking as their PAN or their Aadhaar or any government ID. Your documents could be his own salary, which the LSP facilitated by getting via the employer or anything like that, and a score if the LSP has any. The charges similarly can be different or same depending on the lender and the LSP. So that's the loan product. This slide kind of covers where are the lenders getting from. So in the specific case of Sahay GST, a lender is banking on the LSP to share information about the borrower, the documents that the borrower is submitting to get the loan, a collateral if the agreement is a pledged invoice agreement. Similarly, the documents is just proof, actual details of the collateral itself, and the requested amount is whatever information that the borrower asked for. All of these things will be submitted as a part of the loan application request. Loan application request by the lender. In the account aggregator flow, in the consent, lender will ask for access to the GST and data information about the bureau, or the bureau information. Now, as DEPA comes into picture and everything moves into being a consented data sharing model, more and more fields might get added or reduced depending on the loan type and the agreement between the borrower. So that's broadly the idea of how a lender is going to get all the information they require to underwrite a particular loan application.
So we'll just touch upon, just briefly upon how you go about using the OCEN API from here on and becoming an LSP. For past 2 weeks, it's been great to see the feedback from a bunch of prospective loan service providers in terms of their feedback on the APIs as such, and also in terms of the different kind of use cases that are stirring up and are coming up, which has blown us away. And we request you to look at those different credit product types that you can create for the customers whom you know the best and better than anybody else, and give us feedback on these APIs so that as an open source project, we can collaborate and work with you to make them standardized for different product category types. And our intent is to ensure that they can help you in that seamless connect with the lenders to the extent possible. Now, we touched upon it briefly last time that CredAll as a collective of lending ecosystem players is bringing these different entities in the cash flow lending value chain, whether it is the lenders, the technology service providers who are helping in implementation of the OCEN APIs for the lenders and the LSPs, the underwriting modelers, the loan service providers, account aggregators, all together in the same room, so to speak, so that they can intermingle and start looking at what are the different collaborations that they can undertake to bring out different kind of new products for their customers. And as a very broad checklist that is there for a loan service provider to look at, this is what we have put in place now, and I'll just very briefly touch upon them sequentially. So one, we have seen a lot of LSPs already do this, prospective LSPs do this, where they are already engaging with the technical and business resources that we have been publishing on both the iSPIRT website as well as the CredAll website. And we have seen businesses create different kind of business cases already that they would like to then take to lenders and enable on their front end as an LSP. And that is an exercise that has been coming up where they're putting on the paper what are the different borrower personas, what are different kind of cash flows that they're touching for the customer, can they help in cash entrapment or not, what are different kind of data types that they can surface for the lenders. In certain cases, how will those different raw data types get normalized for the lenders to consume? So the kind of like permutation combinations that we are seeing already in the conversations with different parts of the ecosystems it has been really encouraging. Now, something that we're going to work on with the technology service providers and other participants very soon is to help in releasing the OCEN API sandboxes so that you can tinker around with them and design different product experiences for your target customer. And once you implement these OCEN APIs, we'll share more details on the light API certification that will happen by CredAll Empanel Agency before go live. The intent of this certification is to ensure a very neat and tight integration where security aspects, the user experience aspects are taken care of, and the user experience is uniform and homogeneous across multiple entities that they're interacting with. And the go live eventually will be facilitated with the OCEN certified lenders by CredAll and through an LSP registry. And the details about the LSP registry is something that we will be covering in the upcoming sessions as well. where how do the LSPs go about seamlessly integrating with different OCEN-enabled lenders with regards to sharing of public keys and the whitelisted IPs and so on, is something that we'll cover very soon. With that, I would like to hand it over to Siddharth.
Thanks, Ankit. So thanks a lot, Sudhanshu, for the deep dive into the underlying API flows. And for the folks tuned in the next set of sessions, we will continue to go through how these various players across the ecosystem are coming together to really bring cash flow lending to life, either from the perspective of payments and enabling collections, or from the perspective of consented data sharing to increase trustworthiness of the borrower, or providing capital itself, like the many lenders that are OCEN-enabled. We'll now move and take a set of questions. So the first, and maybe, I'm going through the list of questions. So Ankit, you could probably share your screen that has the slide. But the first question is for you, Sudhanshu. We've received a question around what is the role of LSP in the collections process. So could you probably talk through, what are the different repayment options that are available as a lender, and at the same time, how could LSPs facilitate the collections better, especially the LSPs that are part of the cash flow or part of the money flow of a borrower?
Right. Thanks for that. So, an LSP can play multiple roles in terms of enabling the collections. The first and the most basic role of an LSP can be to just facilitate the actual setup of the UPI mandate or the eNASH mandate that a lender is going to take. This is going to be purely in terms of getting the helping the borrower choose what is the repayment plan they want to set up with, sharing this information with the lender, getting back a URL and opening that URL so that the customer can directly interface with the lender and give the consent for direct debit access on their account. That's like an LSP who might be like a Paisa Bazaar or somebody who's not sitting in the cash flow statement. At Sahay also, we have done the same thing. For Sahay GST, it is just facilitating this direct interface between the lender and the borrower. On the other hand, there can be LSPs who have access to the cash flow of the lender itself. For example, a Flipkart or a Zomato, who do settlements to the delivery boys and the restaurants basis money that was received from the customers. Now, these kinds of LSPs can enable a new kind of collections experience by just directly debiting the funds from the accounts from the amount that they plan to settle to the prospective borrower. These kinds of loan repayments, which are going to be enabled for the cases of locked cash flow, are going to be leveraging this framework called e-liens as we've started work on it, and some more progress needs to be made before we can publicly announce that particular piece of infrastructure. However, even today, LSPs who start facilitating this loan recollections via these locked cash flows can get started with direct integrations with the lenders and therefore take a larger chunk of the interest or the business transaction that gets generated from this loan transaction. Does that answer the question, Siddharth?
Yes, perfect. The next question, Ankit, probably for you, Ankit, is what is the difference between an LSP and a TSP, and how are the two related to each other?
Sure. That's a great question. Now, LSP as an entity is the entity which has got a pulse of the business. So, it has got very high interface with the customer. So let me take example, say, of online food ordering, marketplace like Swiggy, Zomato, or somebody, right? So there they have a connect, say, with a restaurant. They have a connect with the delivery boy. They have a connect with the customer. So that entity is interfacing with three different personas over there, right? Now, the cost of servicing the loan, a small ticket size loan, a sachetized loan for a short tenure, the cost of acquiring these customers for that kind of a loan will typically be high for a big lender with low cost of capital. So which is where this LSP is essentially plugging in these customers who can be prospective borrowers through those lenders with the help of OCEN as the enabling network for that. Now, this LSP, they need to do a couple of things, right? They need to implement the OCEN APIs to connect with these lenders. Now, in order to implement those OCEN APIs, they can either do it in-house or they will tie up with a technology service provider, which will help them in enabling that. So as we discussed about that design delight experience that an LSP needs to create. Now, if an LSP, say, is a non-fintech LSP and wants to focus on their core business, but still wants this setup for financing to be available for their customers very quickly with a quick go-to-market, then they would want to tie up with certain technology service providers like these entities who can help them in very rapid, speedy implementation of OCEN APIs. That is one. So that will help them in funneling these loan applications to these lenders. Apart from that, the other thing where technology service providers come in and help the loan service providers is for making sense of that data. So an LSP might have a lot of different raw types of alternate data. Now, in order to normalize that, to make sense of that, there will be underwriter models, but there can also be technology service providers who can come in and enable in creating this value proposition as well. Now, the technology service provider over here is enabling this for the LSP, but the technology service provider can also help in the OCEN implementation on the lender side as well. So you will have a mix of technology service providers who are essentially enablers of implementation of OCEN on the LSP side as well as on the lender side. And that's the distinction. Having said that, something that we'll cover in going forward is that an entity can actually put on multiple caps, right? They can put on multiple hats and they can be an LSP, they can be a TSP, there can be multiple roles that they can play. But broadly, that is essentially what the distinction between the LSP and TSP is. One being the entity with more direct interface with the customer, and TSP being the entity in enabling that connect with the lenders through OCEN.
Thanks for that, Ankit. There were a few questions on the business model of the LSP and what does it mean as an agent of the borrower and subsequent fee implications of that. So the current set of sessions will be focused purely on the technology and underlying building blocks behind OCEN, because only once that is understood and you've immersed yourself in that, can a discussion about the business model be had. So we will answer all business model related questions a few sessions from now. Then we had a few questions around mortgage registration. So essentially, does this ecosystem allow for online or digital registration of physical property and mortgages against physical property? So the answer is no. The common pledge registry that Sudhanshu and Ankit mentioned is only for very simple digital assets like an invoice / receivable. And currently, registration of mortgages against other assets like physical property are not supported within this ecosystem, although lenders on their own may connect to other data sets like SERSA. Sudhanshu, could you talk a bit about, and I know you'll cover this in detail in the next session, but a bit about the concept of registries and the discoverability. So once a lender gets certified, they become part of a registry. And then once an LSP gets certified, they become part of a registry. And so how does this allow for easier discoverability and subsequent connectivity between the multiple parties, such that, you know, if an LSP is ready, it does not have to physically sit in the office of a lender trying to get its IP whitelisted or vice versa. So probably a quick high-level overview of that would address a few questions before we do the deep dive next week.
Sure, Siddharth. So basically what we're trying to solve here is how to make it easy for an LSP to work with multiple lenders and make it easy for a lender to work with multiple LSPs. The problem here basically is one of trust and trying to know that this is an LSP who has been certified by the open ecosystem and thus follows all the right data protection practices, all the informs the customer well about the experience. So what we're going to do is we're going to set up this central registry wherein each of the certified LSPs and lenders are going to publish their public keys as an encryption mechanism to this registry. What can happen is, as an LSP, once you're on this registry, you will be able to look up the IP details, the address, and all the information about a different lender, and be able to share the packet or the APIs via direct HTTPS connection to the lender itself. The lender on its end, when it receives a request from an LSP, will be able to use the information that is present in the LSP registry to verify that this is the same entity who is calling me, and correspondingly initiate the whole loan offer, loan acceptance, loan repayment APIs. The idea is to decentralize the whole experience of the business contract between a lender and an LSP, and therefore enable larger loan credit marketplaces to be created much more easily. So, just to go into a bigger deep dive, the broad idea is that an LSP is going to once it's done with the whole experience of certification, its own public key, its IP address, its information about the kind of loan it wants to enable is all going to be shared by CredAll into this central registry. All the lenders will have access to this registry. Shares a loan offer on a particular IP address of a lender, the lender will be able to use this for verification of the LSP itself and return back with loan offers. What we've done in this entire is to keep the LSP as lightweight as possible. And the idea is to initially make the LSP like a console via which the user is able to interact with the lender. And in all the screens where, for example, account aggregator data sharing is happening, the lender is directly taking this data from account aggregator. There is no LSP who is in the middle sharing this data or forwarding it to the lender. This reduces the whole hassle of doing audits for LSPs, the possible risk of getting regulated in the future, all of these things. So this whole registry system is going to be a very key part of the OCEN ecosystem going forward. And that is what will allow LSPs and lenders to scale up their partnerships without requiring one-on-one interactions.
Awesome. So we've gone through all the questions. If you have any, feel free to submit them, and in the next session, we will take them up. So the next session will really be a session focused end-to-end on answering all the questions that we receive over the course of the next 7 days. And please do go through the specs with the new context that you got from Sudhanshu and raise any technical questions that you have. You may register on this link. The slides will be circulated along with the presentation by Karthik later. And if you are interested in participating either as an LSP or as a lender or as a TSP to one of these two players, please do drop us an email and we'd be happy to help you out. You may also go through the following report, the UK Sena MSME report, which would give you a deep dive into cash flow lending. It lays it out from an MSME context, but as we had mentioned earlier, these APIs are generalized, and so one can, in the future, use this for lending to individual consumers as well. And if you want a more deep dive view of the account aggregator system, you can go ahead and watch this video.